Considering we've had a lot of people on a daily basis ask us about the current status of the real estate market, we thought it would be helpful to give you guys an insight in terms of where we've been, how the market is performing, as well as what we could expect over the course of the next little while. It's obviously no secret, real estate prices have seen a huge surge, not just in Canada, but worldwide over the last 12 months, specifically in the international major cities. This is a direct result of the quantitative easing, or in other words, the amount of money that the central banks and the Feds have been printing to stimulate the economy on a global scale in order to combat the financial effects of the global pandemic. When we look specifically in Canada, we have seen an extended severity of the pandemic on the Canadian economy, and the small businesses have been on the worst receiving end of this. If one thing that history has taught us is that when the average household becomes fearful in times of crisis, they become very cautious and they go into survival mode and they stop spending money. Without government interventions, this usually results in bad situations. It leads the economy into a recession and in some extreme cases, a depression. This is why the government across the globe have stepped up their efforts through fiscal and monetary policies in order to combat these issues globally. The Canadian government is no exception to that rule, and they have been doing their best to mitigate some of these risks and in order to build confidence back to the average Canadian by offering a variety of different aggressive stimulants and fiscal policies in order to keep the money prints going. Again, to calm some of this anxiety, we have seen the Bank of Canada Governor, Mr. McLem, who came out in July of last year and convincingly and unequivocally say they would not be increasing the rates till minimum 2023. And they committed to pumping the market with a lot of liquidity.
Our overriding message to Canadians is that the bank will be there to provide monetary stimulus for an extended period to support the recovery and to return inflation to the 2% target. If you've got a mortgage, or if you're considering to make a major purchase, or you're a business and you're considering making an investment, you can be confident that interest rates will be low for a long time.
The real estate market is a huge driver of the local and Canadian economy, which leads me to think why the Canadian government took such aggressive actions. Now, it's clear, as an intended consequence of these policies, we have now seen a huge surge of inflation across the board, not only in the real estate market, but in other asset divisions that have, the stock values, cryptocurrency, as well as other commodities surge in terms of the prices. As a result, the Canadian Home Index now shows a 20% increase in home prices across Canada for the last 12 months. It's clear that the more money that is printed, inherently the tangible assets go up in value as the value of the fiat currency goes down. We have seen prices in the Lower Mainland, detached sector, and in townhomes increase 20 to 30% in the last few months alone. Such huge run-up in the prices were a direct result of cheap money from the banks, as well as lack of inventory in the market, which created a lot of panic buying. This is why we are seeing very emotional, anxious buyers trying to enter the market. This is why you would hear in the news houses selling $500,000, $600,000 over ask price with 20 or 30 offers. During these times, we were strongly advising our clients to approach with caution and be mindful of the natural tendencies and to make decisions not out of this desperation and out of fear. Fast forward a couple months. Now, as we expected, we are now starting to see a shift in the market. Although the prices are still on the rise, they're starting to stabilize. There are now much more inventory available, and the panic buying that we were seeing a couple months ago seemed to have subsided. And also, we know the government, to cool things down, they've started to add in more stress tests. It's obvious, real estate is definitely a good vehicle and a good tool to protect you and your family's wealth against inflation and potentially hyperinflation that is coming due to all the money and all the debt that is being printed every day. Your trusted realtor and advisor, I'm Ruzara. If you want to know how these changes affect you and your family, or your plans for the future, or if you have any real estate related needs or questions, I encourage you to give us a call. We're happy to sit down with you, grab a coffee, grab a cup of tea, and see what we can do to strategically position you to take advantage of the market, whether you're looking to buy, whether you're looking to sell, or whether you're looking to invest. God bless.